Hi, welcome back to another episode of The Next Big Bet, a podcast series brought to you by Creddinv Technologies. Today, I have a very special guest, and I'm really proud to have Akhil Yajaman. He is a non-seasoned first-time startup investor, and he's joined our platform and he's invested through our platform. Hi, Akhil. How are you?
Hi Divya, I'm good. First of all, thank you for inviting me. And I think the key in that introduction is a lawyer, and I work in corporate, and the fact that I'm investing in a startup. I think back to a decade ago, and I hadn't heard of this happening too much. It
Okay.
was always either PE, VC firms, top angel investors who were involved into startups, and news about it was, you know, I hadn't heard of it much, or maybe there wasn't great participation of retail investors. So I think the theme of this episode could be introducing and encouraging retail participation in startups as an investment class. Essentially, I'm a COVID baby. I started investing in the Indian equities market and crypto more or less
Okay.
simultaneously in 2020. And we had a great rise, great boom. Almost anyone who invested made money.
Great.
So, somewhere in 2021, I remember I used to hear a lot about startups, them getting funded, you know, from across the world and even in India.
Okay.
And I thought, how is this happening? Where are they finding these people? So obviously, I looked into it, and that's when I realized that it's sort of reserved at that point. You have people at the top who invest very early on, and they get uh, the best returns.
Okay.
So in 21, I remember there was a website in the US. I don't remember the name. They required me to be an accredited investor, which means you need to
Okay.
have certain threshold, certain net worth, which I didn't have. And even in India, that you need to have certain years of experience working with a PE or a VC, or you need to have, again, minimum investment threshold, net worth threshold. So at that point, the access wasn't as open. So I basically gave it up. I said, okay, fine, I'll stick with equities, crypto, and
Okay.
whatever else is there. Somewhere in 24, mid 24, I kept searching.
Okay.
So somewhere in mid 24, I happened to find, among others, Creddinv,
Okay.
and I just signed up. When I signed up, I wasn't fully sure how this was going to work or what's going to happen. Until not too long ago, I got a call from your team saying that we have certain startups that are listed. We've updated our app. I took a look, and I realized that the minimum starting amount is 5 lakh, which is not small, but relatively speaking, as opposed to we hear in like high lakhs, crores,
Right.
millions of dollars US. So when you have a relatively smaller starting amount, that creates access to regular retail investors that you would otherwise find subscribing into IPOs and increasingly now into unlisted shares. So I always wanted to explore this, didn't have the avenue, and now I think I have found something that could be my starting point or
Okay.
launchpad for me as an investor in among other asset classes.
And also, I was wondering, so you have already invested in other things, like other asset classes. So, why startup investments? Would it be like a part of your financial planning, like seeing others making multiples of returns, or how does it work?
I would be lying if I said that it wasn't a part of it.
Okay.
Look, but I treat it as just another asset class.
Uh-huh.
To
Okay.
start with it, from an investor perspective, it is good to have a diversified portfolio.
Yes.
Now, of course, it is as per your risk tolerance. You carry out a risk assessment and see how much you want to put where. But the idea is not to miss out on it, to
Okay.
give it a chance, see if you like it, you continue with it, or you don't. So, in that sense, I thought, look, there's you hear a lot about it, and at that point, you want to be in the mix. You don't fully know what it is, but you want to start out by being in the mix, and
All right.
eventually, you learn every day.
Right.
No matter
Right.
how seasoned you are, not seasoned, you always keep learning.
Right.
The idea is not to miss out on it.
Okay. Okay.
That was my motivation.
Because you've been investing in other kind of asset classes, what do you see as the major difference between other equity investing and startup investing?
So, if we talk specifically about, let's say, stock investing, equity investing, and startups, effectively they're the same, but essentially they're different. Effectively investing in companies is the same thing, but it's a completely different space in terms of how they're regulated. the stage at which you're investing very early, as I said earlier, investing into uncertainty. The companies that are always listed, you have a great management, long track record, history. Startups generally don't have that. You have maybe 2-3 years to go off of, which isn't, there are companies that have 40 years, 50 years.
Mm-hmm.
Startups generally have 3 to 5 years. So in that sense, they are different. But ultimately, you are buying into a piece of a company. You're buying into the growth story of a company.
Okay.
In that sense, that's what I feel the major difference is.
Okay, that's interesting. So, have you been thinking about entrepreneurship at any point of time in your life? So, would that become another reason for you to start up investing, or is it not?
Possibly, I've thought of it. Look, I don't come from a family of business owners,
Okay.
entrepreneurs, business runners. So while growing up, I didn't grow up in a business environment.
Mm-hmm.
I was told, business is not ours, business is not for us. Job, get a secure job. So of course, I've tried exploring things, but possibly nothing has fluctuated until now in terms of investing.
Okay.
But in terms of operating a business, again, I've thought of it. Nothing has materialized yet, but you never know. This could be sort of the gate to it.
Okay.
You never know what connections you build over time when you do something like this, who you meet from which part of the world, and anything can happen. So
All right. That's actually an interesting take, like starting with investing in an entrepreneurship journey and then thinking about taking up your own journey.
if you don't possibly have the greatest idea, you're not sure, you don't know how to go about
Mm-hmm.
it. One of the ways is, you can reach out to business owners, great. One is you start investing in companies, see how they operate, get an understanding, develop a deeper understanding each time you invest, and maybe you never know who you meet along the way, which business owner you meet who might be interested, and maybe through your investing you understand enough to a point where you can start,
Right.
and eventually you grow along with the company.
Right. Okay. So, if I have to ask you about that tipping point of entry, was it the performance that they are with at the moment, or what was that point of entry?
More so, it was the co-founders
Okay.
actually. So the things that if I were to speak generally,
Mm-hmm.
what do you do, why do you do it, and how do you do it? In answering those 3 questions, you try to understand, you get a sense of what the founder is doing, what is the reason for them doing it, and how do they plan to execute it. Now, startups by nature are not in the greatest financial health. They are not, booming or doing great with numbers. But you get a sense that the founder is serious, founder cares, and that I think more so caught my attention. Of course, I
Okay.
liked what I saw, but ultimately it's up to the founder.
Okay.
It's based on, the founder can easily tip me off or get me back in,
All right.
because
Okay.
ultimately it is a human being that runs a company.
Mm-hmm.
Legally, when, considering that I'm a lawyer, we often say that company is a separate legal entity on its own. But fundamentally, there is a human being running it. So if you don't understand the human before understanding the business,
Mm-hmm.
it doesn't really make sense, at least for me. From my
Okay.
perspective.
Okay. That's something. So that's something I've been listening from a lot of investors. But for a first-time investor to just see the founder's behavior and what he is thinking about his own product and how he has envisioned it and things like that makes you judge to make your final investment is kind of interesting to know.
Absolutely.
Yeah.
Because it makes sense.
Mm-hmm.
And in this journey, I spoke to a couple of people that I knew who
Okay.
either run some kind of business or do something. And I actually asked them,
Okay.
when you seek for investments,
Mm-hmm.
what do people ask you?
Okay.
That was one more way, other than reading articles, watching videos.
Right.
That is standard, that is expected. But I spoke to people,
Mhm.
and that I think gave me more insight into what is it that people are actually looking for.
Okay.
Fundamentally, from you as a business owner, what are they looking for?
Mm-hmm.
So that helped me frame my questions.
Okay.
In that sense, it makes sense.
If I may ask, and if you are comfortable sharing, what are the first set of questions that you asked to the founder, or maybe even the investment banker that we have in our team?
I'll tell you the first question that I asked the founder.
Okay.
Now, 2 years ago, I was investing in a startup. each of the startups that I saw, all of them have raised funds before. It wasn't their first fundraising. I asked them, what did you raise your last funding for? And was it used judiciously in the manner that you had pitched at that time?
Okay.
Because this time when I sat, they had a pie chart, or each of them had a pie chart, which says that certain money is going to be allocated here, allocated here, allocated here. So I asked them, last time when you did this and you secured funding, did it go the way you envisioned it? What issues did you face at that time and how did you resolve it? That was the first question.
Okay.
Beyond that, it's just, I started with explain your business to me, explain your business model, how is your market share like, do you have a fit in the market? And then it just goes on. Then we jump into the financials, some of the legal, intellectual property related, whether you have it, potential of having it.
All right.
So yeah.
How were you able to do like a background check and all of this? Was it purely based on the documents that were provided by the founders, or was there anything else that you did in the background?
So largely I relied on the documents provided to me, which was sufficient.
Okay.
There were financials, there was a standard pitch deck, company incorporation documents. But then you tend to start stalking them, or you tend to start researching more on them.
Right.
Either on LinkedIn, you go get on Google and see what are the things that they've done. Is there any news about them? What was the previous news about them? Was there any negative news about them? So you start researching on these companies.
Okay.
And that essentially added to the reading that I had to do with the documents.
Okay. So does also peer behavior help here? Like if any other investors like you have invested in the same sector, let's start with that maybe. Other investors who have invested in the same sector, have their behavior impacted your decisions, or how has it impacted?
Impacted, might have influenced. There is a tendency that, so consider this. If someone sees that a big name VC firm has invested, heads turn and people ask, okay, what did they see? What did they see that I didn't see? Maybe I've looked at the company, but then you come to hear that one or two firms have invested. What did they see? That could influence your decision. So whether it's a big investor, small investor, when you speak, you generally tend to get influenced, but ultimately it's a judgment call that you take and you develop each time.
Okay. Is there a gut feeling, or is it purely based on?
Gut feeling is always there. You get a hunch. Now, that hunch could go wrong. It could turn out to be right. But what I figured is, if I take a decision based on some good research, good understanding, and eventually a gut feeling, it's my decision. If it goes wrong, I am responsible and I am accountable. It's not anyone else who's taken that decision for me.
Okay.
I'm okay to get help. In fact, you should, as a novice first-time investor in any kind of investment, always seek help. Learn from others' mistakes, but trust your gut.
Right. Okay.
Usually it's right, but if it goes wrong, don't beat yourself up because it's your decision. It's okay. You get some, you don't get some. That's fine.
Okay. I think let's just start talking about the money. So before you invested, what was in your mind? What kind of returns did you want? Was there anything like that?
In standard Indian equities, investments are subject to market risks. We know this. When it comes to startups, investments are subject to massive risks. You don't know. You are essentially investing into uncertainty.
Right.
The benefit that you're getting is you're investing at an early stage, so you get the best bang for your buck. You try and gauge what returns could possibly be. You start out by hearing someone made 10x, someone made 100x. Right. But for me, my expectations are 0, but my support is 100%.
Okay.
If I look at it only from my perspective, saying, I want my investment to grow, for that the company has to grow. The idea is to be more involved with the company, watch it grow, and if it grows, my investment by default will grow. In terms of how much I expect, as I said, I don't reasonably, of course there's an expectation, but I don't voice it.
Okay.
And I keep it at bare minimum so that whatever I get surprises me.
Right.
Right? Because you hear stories of 100x, you hear of investments tanking, going to 0. Anything can happen. So in that sense, and I feel if you get that clear in your head, 50% of your job is done. The pressure is just off your back.
Okay.
Once you realize that you are investing in an extremely risky asset class, the riskier it is, the greater the rewards. We all know that. But
Right.
the greater the chances of it going to completely zero or close to zero. The moment you accept that and then start out, it gets easier.
All right. Okay. Yeah, I think that's a very good advice for any first-time investor. That actually brings me to another question about being a part of the journey of the startup that you invest in. So, how much do you think an investor can help and is able to help? Maybe from your personal experience.
So there are different kinds of investors. Broadly, you have financial, you have strategic impact investors.
Right.
If you have industry domain experience, 10 years, 15 years, 20 years, you'd be able to obviously offer more input into how to run that business, how to drive that business. If you're a simple financial investor, you put your money and you leave it, that is also okay, that is acceptable. But what I'd like to do is over time understand the business more and potentially, maybe after a couple of months, couple of years, when I gauge the business, when I'm in a better position to understand the business, maybe offer any help, inputs
Okay.
that I can to,
Okay.
because ultimately the goal is the same, be it the founder or the investor, both of them want to watch the company grow.
All right.
So again, I accept that it can be done. You put your money and just leave it. But I wouldn't agree to that. I'd like to be a little involved. But you need to understand your position and role. When I say involved, doesn't mean you go and start trying to take over the company. No, you understand the limit to which you're involved and you offer your best inputs as you can.
All right. Okay. Also, like I have heard about 58% of the first-time investors, they tend to go and ask the founders every week, like what is happening. It's not about where my money is, but what is happening with your company. Are you on the right path? So things like that. So have you got that thing inside you? Like I should call them up. I should ask them what is happening.
Not yet.
Okay.
See, the thing is, technically we're still in the funding round. So at this point, I don't find it necessary for me to call them and be like, hey, where's my money going? Or the money you've raised thus far, how are you using it right now? Once the round is over, naturally there will be a meeting. And at that point, I think periodically it makes sense, quarterly updates, from time to time, but I wouldn't bother them every day or every other day because businesses take time to grow. And again, don't get me wrong, the purpose of investing is to grow money, or rather grow wealth. But the thing is, wealth doesn't come overnight. It doesn't come in a year's time. If you're lucky, it could come in 5 years. But it's a 10 to 20 year journey, anywhere in between.
Okay.
This takes time. So calling and pestering, how's the business doing? Are you on the right track? What are you going? Every other day or every week, I wouldn't do it because I know that I probably can't expect different answers in, let's say, 4 weeks in a month. If I call each week, I'm probably not going to get different answers because growing a business takes time. That is something I have understood and I respect that. Time to time periodic updates is something, of course, fundamentally seems flawed. That time I will weigh in my opinion because my money is there in it.
Right.
But ultimately, by investing in a company, I have trusted the founders that they will do a good job. They will carry the company with a long-term perspective. So to that extent, I find no reason to reach out to them
Okay.
too frequently or bother them.
Okay. And what do you think is the role played by aggregators? What communication help do you think we can provide and that would be useful for you rather than reaching out to the the startup founders?
Look, for me, I can speak for myself, or rather, I will speak for myself initially. Had your team not reached out to me, as I mentioned earlier, I probably would have just still stuck with whatever else I was doing. I may not have taken this first step. The fact that Creddinv exists, as I said, there are other platforms, many other platforms. A lot of restrictions. There are some restrictions on your platform as well. For instance, Cat 1, Cat 2,
Right.
alternative investment. Now, those are for P and VC, but the fact that there is an other section called angel investing, which starts with a relatively low amount, I don't feel like I'm missing out on the other categories. That is what I felt before. The fact that, array, there's an opportunity, but I have no way to access it right now. Now that I have one way to access it, I don't feel like I'm missing out on any other category of funding style.
Okay.
So that definitely I feel has opened the doors for me as an investor. The goal is to increase participation, encourage participation of retail investors. Of course, it's a relatively new space. It would be a relatively new space for us. There was a time where it was just big people investing into companies, and
Yes.
eventually IPOs came, where the public got access to General India Inc. So this again is sort of, I feel, a beginning stage of that, a beginning phase, where we are democratizing startup investment by retail investors. So I think it's a good thing, and there's a long way to go, because it's easy. It's most retail investors would be hesitant, and that shouldn't surprise you, because startups are inherently risky.
Yes.
So in terms of what role an intermediary plays, such as Creddinv, the fact that you exist is great for retail investors like me, because we didn't generally have access, as I've mentioned earlier. So my expectation is, or not my expectation, but what I found for the first time was all the information that you otherwise have to directly ask from a founder is already asked for, is already available. There are pros and cons listed, details about the companies, so that's good. There's the good and the bad. So transparent communication about the companies that, because ultimately it is the platform that has filtered through which companies to list, which companies to not list. So there is a level of trust. So as an investor, I would expect that, of course, you have done your job well, but you give out all the information, good and bad, and then we can then take an educated, informed decision. Also, your team, it's not just about providing information, listing it on the app, and then you do what you want. If you have questions, you don't understand something, your team is always available to take a call and clarify things. So in that sense, it makes the process a lot simpler. It simplifies the process. It makes it more lucrative. More, my interest generally picks up, because a lot of the things that I possibly couldn't have done on my own, or maybe would not have wanted to do, is done and ready for me. And now it's just, once I get all the information readily available, it's me and the founders, and we can take it on from there.
Okay.
So in that sense, it reduces a lot of the work that I would have otherwise had to do.
Okay, we're very glad we were able to do that for you, and we will definitely continue doing that. That actually brings me to another question about at what stage do you think you are ready for your next investment?
So one thing, as a simple advice to someone who's never invested in startups, if you get onto a platform and see 10 startups, you see 2 more getting listed, you see 3 more getting listed, do not FOMO into it.
Okay.
There is a tendency that can happen. It has happened to me in crypto investments, in stock investment. It happens to everyone. As far as my next investment, again, it could be in the next 3 months, it could be next year. I am not too, or as of now, if I were to say, I haven't thought of it.
Okay.
But of course, I will be exploring the platform regularly, and now branching out, seeing where else and how else I can find investment opportunities.
Also about, I am not sure if you are very comfortable sharing, but if you are, what was the volume of amount that you thought you could put into a startup? Because you're starting out in startup investing, what is the first ticket size that came to your mind? Like, okay, I'm ready to put this much and I'm ready to wait for my returns. What was that?
So as of now, I won't be disclosing, because as I mentioned, the funding round is still going on. So for that reason, I won't be giving out the amount.
That's okay.
But what I will say is, you invest according to your risk appetite. Even if I were to say a number, you don't automatically run to that. We have a tendency, we hear someone invested that much, oh my god, I must invest that much, otherwise the returns may not make sense. That is your first thought. Whether it's 5 lakh, 10 lakh, 20 lakh, 50 lakh, 1 crore, it completely depends upon you and how much you can spend. As I said, it's long term investing when it comes to startup.
Yes.
You almost assume that you are going to make no returns. You keep low expectations, or not low, zero expectations essentially, but 100% support.
Okay.
That's how I look at it.
Okay, so it wasn't about the money that you were ready to invest in, but other things like the concept of startup investing is what was in your mind when you chose to invest,
Yes.
is what you said. Okay, so does sectors affect you in any way while choosing the amount that you want to invest, or seeing the performance of the sector instead of seeing the company itself? What kind of other kind of broader knowledge that not as an investor, like as any person who reads about startup ecosystem, would that affect the ticket size that you choose?
Yeah, possibly. One is how much I'm willing to invest at that time.
Uh-huh.
If it just so happens I can invest this much amount, then so be it. But yeah, the sector obviously does have a great influence. One is you look at the projections in the sector. There's a general study on how, you see terms like CAGR.
Mm-hmm.
Over the next 5 years, over the next 10 years, this sector is going to do well, that sector is going to do well. Ultimately, those are all predictions, educated predictions, but predictions nonetheless.
Okay.
And possibly if you understand it more than other sectors, that might draw you towards one over the other. But that doesn't mean you shouldn't explore the others. You take the time to learn about the ones you don't fully understand or you're not fully aligned with. Maybe you're not too sure. Sometimes you're not too sure. Sometimes you're like, okay, I know this service, I know this product, I know this business, I know someone who's in it, and I know it does well. So that could be an influencing factor.
Okay, so does it work like you've invested in your first startup and it is from this particular sector, and you have started gaining more knowledge about that sector? So would you be ready to invest in another startup that is from the same sector, or would you be ready to learn about a new sector and invest there? So how does the behavior work there?
For me, it's both.
Okay.
I will never dismiss one sector because I've invested in it,
Mm-hmm.
but I will obviously also not just stick with it to say, okay, I've invested in one sector. I don't know if this company will do well, but if I invest in 5 companies in the same sectors, 1 or 2 of them are bound to do well. So you try to balance it. Naturally, the tendency is to want to diversify
Right.
your sectors.
Yes.
So in that sense, obviously I'd want to explore more, learn more about sectors, but I wouldn't shy away from investing in the same sector.
All right. Okay. I think we'll just wrap up the podcast. We've been talking a lot about first-time investing. What would be that one last advice you would like to give your peers now that you're not a first-time investor anymore, but to people who want to get into startup investing? What would be the advice?
Do it if you're interested. Conduct deep study into the startups that you want to invest, the sectors you want to invest. If you invest in equities market, you put your money and leave it because you trust that they will do well. They're established companies. When you get into startups, you're essentially buying into the growth story of a company. And trust me, in about 10-20 years, when you're a part of it, you'll be happy and proud that you were part of the growth story, that you could have that you did in some way contribute to what the company eventually went on to become. So again, if you're hesitant about startup investing, always reach out to people who've done this before, friends, family, whoever. Never shy away from seeking support because it is ultimately your money. So, and yeah, just think about it.
That's very well said. And thank you so much for being here today.
Thank you for calling me.
Yeah, thank you. We'll wrap up this podcast here. See you in the next episode.